Hi, I'm Tracy. This video is for folks 65 and above paying for Medicare Part D and B premiums. Are you aware that earning just a few extra dollars could dramatically increase your Part B premium? If you've never heard of IRMAA, you're not alone. So what is exactly an IRMAA? It's a surcharge applied to Medicare Part B and Part D premiums if your income exceeds a certain threshold. Basically, the more you earn, the more you pay for Medicare. But the way it works isn't always straightforward. IRMAA surcharges apply to you whether you're on original Medicare or a Medicare Advantage plan. Keep watching as we talk about this complex tax for Medicare. What is IRMAA? How is it calculated? Income thresholds for IRMAA in 2025. How to potentially avoid or minimize these charges in 2026 if you take actions now on your 2024 taxes. Most importantly, let's talk about the importance of building your withdrawal plan for your retirement. My husband's Medicare Part B premium doubled in 2022, and we didn't know why. That's when I found out about this IRMAA surcharge. We had taken a large IRA distribution out one time in 2020 to cover a down payment on a house, and 2 years later that action triggered the Medicare IRMAA surcharge on his Part B premium. I'm making this video to educate folks so they go into making Q4 actions with the understanding of potential consequences. This information is to share my personal experience and help others increase their financial literacy. I'm not a professional planner. Please consult me if you need help with navigating your personal situation. Your retirement plan is custom to you, and there are many options to either reduce or take advantage of your situation. Let's talk about Medicare for 2025. Part B premiums are increasing to $185 a month. They were $174 last year. And IRMAA is calculated on what they call a MAGI, a modified adjusted income. It takes your adjusted gross income off of your taxes, and then it adds back things that weren't taxable, like non-taxable interest and dividends, muni bonds kind of thing. But it doesn't add back untaxed Social Security. So it's a unique formula just to Medicare. It is a 2-year look back. So for 2025, it's going to look back on your 2023 taxes to calculate out this MAGI amount. It is calculated annually, so if you do have a one-time, it will only last a year. You're not penalized for life, and the following year will be recalculated on the next year's tax return. So that's why it's so important for Q4. You are making actions now, and this will impact your 2026 Medicare premium IRMAA surcharge potentially. These are the projected 2025 Medicare IRMAA surcharge brackets. They will release the actual tax brackets in the fourth quarter, so in a few weeks. There are incomes for single and there's incomes for married filing jointly, and then the Part B IRMAA gets added to the $185 for your monthly cost. Part D has an IRMAA as well, but there's no base premium. It's based on what unique Part D plan you buy. So these are the IRMAA charges that get added to the plan's premium amount that you get. For the higher income earner IRMAA surcharges, the income threshold for married couple filing jointly starts at $212,000. So if you are under this amount, you're good to go. There's no surcharge. But going over by anything, you'll face an IRMAA surcharge. So this is the brackets table that you want to pay attention to. Here's where it gets tricky. IRMAA operates on a steep tax cliff. Imagine you're just $1 below the income threshold. You're great, you're clear, you're not going to have to owe a surcharge. You'll pay just the standard premium. Now they do change every year. They are by inflation, and it's pretty complicated to calculate in the future what those might be. But if your income goes over just by $1, even by accident, you can end up paying hundreds more every year, depending on what cliff you're jumping off of. That's why it's called a cliff. You don't slide into higher premiums gradually, you fall off the edge. In that example, they'd see their Medicare premiums jump from $185 a month to $257 per person. That's $863 extra each year, just for crossing the income line. If you're both on Medicare, the surcharge applies to both of you, so it's double the surcharge. That's why it's really important to understand this and see how you can minimize it, or can you use this as an opportunity. So we'll talk about that. How do I avoid this tax? That's where we're going. First, it's important to know your income ahead of time and plan for that one-time bump in income, like selling an investment, taking a distribution. You can also explore doing tax advantage retirement account distributions instead of your IRAs, like a Roth. You could make charitable contributions to reduce your taxable income. But again, that's only if you know it 2 years ago. When planning for the current tax year and the future, you can make strategic adjustments to keep your income just below this bracket and aim to hit the upper limit of the next one. So let's look at this table. What do I mean by that? So let's say you're at $215,000. So this is just into the next bracket where you owe a surcharge. You're slightly over the threshold. So staying there really doesn't give you much benefit. Paying that income or that surcharge, you might end up paying a lot more without much benefit. To avoid this, we can consider one of two things. We can either reduce your MAGI, which again, you have to do that in that current year tax action area. So you could have made a charitable contribution. You can delay distributions, reduce the distribution you had planned on making just to come under that threshold. Or you can say, let's go for it. Let's go take it as an opportunity. Fill that gap with a Roth conversion. Take more in your distribution. You're still going to end up having to pay for it, but at least you're getting some benefit of that Roth conversion. Keep in mind, IRMAA surcharges are based on income from 2 years ago, and these brackets are adjusted for inflation. So the 212,000 bracket could be something up around 213, 215 in a couple years. This is where it's essential to rely on your team of financial professionals or take time to improve your financial literacy to navigate these rules effectively. While you can't change what you're going to pay for 2025, you can look and act now on your 2024 taxes in the next couple months to be prepared for your 2026 Medicare Part B and D IRMAA surcharges and brackets. If you've been hit with an IRMAA, but you've had a life event that reduced your income within the 2 years, like retirement, losing a spouse, you may be able to appeal the surcharge. Understanding this surcharge is crucial for anyone planning their retirement or living on a fixed income. I suggest you learn a little bit more on this and re-look at your withdrawal strategy and compare your tax brackets, your IRS tax brackets, with these IRMAA brackets. And then try to figure out how does your withdrawal strategy figure into these. Don't let unexpected costs catch you off guard. IRMAA and the Part B Medicare surcharges are avoidable, but only if you're aware of the rules. Don't let small income increases lead to a major financial hit. If you found this helpful, make sure to subscribe to Living Life in the Silver Lane for more tips on navigating Medicare, Social Security, managing retirement expenses, and planning. I'd love it if you subscribe to our channel for more helpful videos. Join the community. Comment on, did you know about this, or is this something new? Were you hit? How did you take advantage, or what kinds of tips do you have to reduce some of these if you've been successful in navigating these ahead of time? Thank you for watching. I'm really grateful for you watching to the end. I look forward to seeing you in the next video. Please leave a comment.